Hello and welcome back to Bhavani JAIIB. Today we are talking about retail banking, especially made for Indian bank employees aiming to crack JAIIB. Hi future banking leaders. Today we are going to explore retail banking basics together. In our journey through Paper 4 Module A, we start with the first part, the introduction to retail banking. Stick around to learn the basics, characteristics, advantages, disadvantages, its interesting history and future. So, what is retail banking? Before we get into that, let's understand what intermediation is. It means matching people who want to lend money with people who want to save money. Mobilization is the first step to intermediation. Mobile means to move. We are moving deposits which are in the form of CASA in a way that it is used for lending. Efficiency of any economy depends on the savings generated in it. Saving money is the first step to making an economy work well. Saving constitutes the source for creating further wealth. Don't forget that every rupee saved is every rupee earned. The main objective of retail banking. As we all know, the major function of the bank remains collecting deposits in order to lend. Imagine a balance sheet as the bank's Bible. It has two sides. What the bank owes forms the liability, and what it owns forms the assets. In retail banking, how do you remember which side is assets and liability? For simple understanding, liability, the first letter of liability is L and it is on the left side. So L and L, and what is remaining is on the asset side. So this is an easy way of remembering it. In retail banking, it's not just about collecting money, it's also about giving loans for things like houses and education and vehicle, etc. We will be further talking about this balance sheet in the accounting chapters, but as of now, we are only looking from retail banking perspectives. Retail banking also offers credit cards, depository services, and para banking. Now, let's talk about two types of retail banking. Mass retail banking gives the same products or standardized products to all customers, like offering basic accounts like savings bank, current account, checkbooks, ATM, etc. Whereas, on the other hand, the class retail banking, which is often in private banks or foreign banks, gives customized products to wealthier customers like the high network individuals. Though there are um, a lot of definitions and graphical representations of retail banking, I will just look at the one which has been given in the suggested textbook. We have the banking on top with the individuals and the firms, so which is divided into individuals and firms, and individuals are further divided into retail and entrepreneurial. And the retail banking is further divided into mass retail banking and class retail banking, which we just now saw. So I will just focus on one of the definitions here, anyhow. Um, Usually, definitions are not asked in the exam, but we will just look at the definition to have a better idea of what retail banking is. Retail banking refers to banking in which banking institutions execute transactions directly with consumers rather than corporations or other entities. Let's simplify the definition. Retail banking is when banks directly help regular people with their money and not big companies like Reliance or the Adani Group. Okay. Next is the characteristics of retail banking. Here again, we have many points to cover, but we are only focusing on the important ones. It is targeted at individual customers or small organizations, which only includes few people forming a firm kind of thing. Large number of customers with well diversified portfolios, which covers all people from all occupations, like how it has been shown in the picture. Services are extended in both physical and virtual form, which we all know that it is in the form of internet banking and mobile banking, card payments, etc. Advantages of retail banking. Now let's talk about the good stuff. Retail banking has a big customer base, which spreads the risk. For example, I'm giving 100 PM Swanidhi loans, 10,000 rupees each, and maybe there are 10 defaulters. What would be the money I will be losing? 1 lakh at the max? But what happens if you are giving a very huge loan to a very big party, like in the case of Nirav Modi or Vijay Mallya, where the banks have lost huge amounts of money just because one person has defaulted? Now, this is called as risk spread. In retail banking, the risk is spread across huge number of people in small amounts. People borrowed loans for their children to study or to build their dream house. And they are so loyal to the bank that even now they think that it is because of the bank they are where they are now. This is called loyalty. And retail banking helps in gaining the trust and loyalty from customers. But there are challenges too. Sometimes banks charge fee for no reason, charges for no service. This is something that we come across on a daily basis. When the person says that there is no SMS, but still the annual SMS charges are being cut. So this is like a daily raga that we keep hearing in the bank. But this is a fact that our customers face a lot of problems with respect to these technical issues. One more point is where the banks are not following proper due diligence. Some officials in the banks are just blindly following what the superiors say without checking the genuinity. They give away loans without following proper due diligence, which puts them and also the bank into risk. As a piece of advice, I ask all bankers to follow due diligence. Compliance first, business next. Next is the device control apps. We know that a lot of frauds that happen in this area. People call to ask you whether you have done your re-KYC, and if you haven't, then your account is going to be locked. So kindly press on this link and pay minimal amount to reactivate your account, and then the person clicks on it, and boom, all the money from your account is gone. Kindly educate your customers about this, especially the Aadhaar enabled payment system frauds which are seen nowadays. This is quite surprising that even after government has introduced the Jan Dhan Yojana to ensure maximum number of people to open accounts in banks, but only 10% of the targeted population remains covered. This should not be seen as a disadvantage, according to me. It is rather an advantage and an opportunity for us to offer the retail banking products to the other 90% which is uncovered. Also, not all banks do a good job checking if someone can really really can pay back a loan. MSME loans without collateral was introduced by the government as a part of developing the unemployed and the less privileged. But some are misusing the schemes and becoming willful defaulters, leading to losses to banks. Any loss and faith in a particular bank can lead to a sudden outflow of deposits, resulting in the collapse of the bank, also called as the bank run. You must have watched in the movies where there would be a rumor that the bank is going to just shut down, and these people just panic and run to the bank and remove the deposits, which actually collapses the bank, and the process is called as the bank run. Now let's travel back in time a bit. Earlier, banking by public sector banks were done on a more general approach, and there was no specific demarcation as retail and non retail activities. So everything was one. But foreign banks, which was set up in early 1980, started a new model focusing on retail banking like credit cards. Citibank introduced credit card for the first time in India. The entry of the new age private sector banks created new approaches to retail banking, and also, not to mention, the IT revolution, which made our manual banking to core banking system. You must have heard from your seniors saying that we used to have huge cash books and ledgers. Everything was manual, starting from your passbook. Imagine. The future of retail banking, or I can say the reasons for the growth of retail banking, the increasing purchasing power of the individuals right now, especially with respect to the middle class, the advancement in the IT sector, which we just spoke, the engine of economic growth, which is the retail banking as of now, the business or risk, which is widely spread, and that is the reason retail banking still stands out now, automation of banking process in the form of mobile banking and internet banking and ATM cards, etc. And the decline in interest rates compared to what it was in the earlier times. Save less and spend more is the new mantra of the new age generation. The future of retail banking. Application programming interface is an aggregate platform to provide the best digital experience. The banking as a service, also called as the BaaS, enables the third party organizations like the NBFCs to integrate with the bank to provide innovative services. Blockchain money transfers. It is a faster and more transparent with low cost, which means that any transaction initiated usually needs time for settlement in the backend. But blockchain will make this faster and cheaper without taking time for settlement. Artificial intelligence, which is the current monster, which seems to have the potential to take away many jobs. Artificial intelligence in banking is a game changer, definitely, and it is said that it can prevent frauds and it is better at analyzing the customer needs. Instant payment options like wallets, our Paytm, PhonePe, Google Pay, which are being used by us of late. The rise of big tech, the company and payment related offer better quality banking to the people. Phew, that was a long tour. Don't forget to subscribe for more insights into the world of banking. Stay tuned, stay informed, and keep banking the Bhavani JIB way. In the next chapter, we will be covering the role within the banking operations. Until next time, happy banking.